Before I get into the results, I want to set up the framework because this test only means something if the rules are clear. Here's what I did. I chose SPY on the 1 hour chart for the month of April 2026. This was a deliberately difficult month to pick. Tariff policy, uncertainty, a surprise CPI reading, mixed jobs data, and consumer confidence sitting near multi-year lows. The kind of market where indicators get tested, not just shown off in a trending environment. Traditional setup, RSI, with standard 14-period settings, MACD with the default 12-26-9 configuration, and a 20/50-200 EMA stack. Every signal I logged required at least 2 of the 3 to agree. That's standard confluence-based trading. No wild improvisation. AI setup, LuxAlgo signals and overlays for buy and sell signals, and TrendSpider's automated trend line and pattern detection for structural context. Again, I required both to show agreement on direction before logging a signal. Same discipline, different tools. Entry logic was identical for both. Signal at the close of the trigger candle, stop below the nearest structural low or above the nearest structural high. Depending on direction, target 2x the risk. Clean, repeatable. Let's start with the traditional toolkit. RSI, MACD, and moving averages are not bad tools. I want to be clear about that. They've generated real profits for real traders for decades. The problem is not that they're wrong. The problem is when they generate signals. And what happens when they're in conflict? Here's what I found over 30 days on SPY. The traditional setup generated 24 signals over the month. Of those, I logged 11 as clean, meaning RSI and MACD were in agreement and price was in a logical position relative to the EMAs. The other 13 were partial. One indicator said one thing, another said something else, and a discretionary trader would have had to make a judgment call. Of the 11 clean signals, 6 hit their 2.1 target, 5 hit stop loss. That's a 54% win rate on clean setups with a net result, if you're trading 1% risk per trade, of roughly positive 2% over the month. Not terrible. But here's the problem that the raw numbers don't capture. There were 3 specific moments this month where the traditional setup generated false signals that a systematic trader would have taken and gotten hurt. The first was April 7th. RSI hit oversold on the morning sell-off and printed a bullish divergence. MACD histogram was flattening. The 20 EMA was below price, classic setup for a bounce trade. Price did not bounce. It ground lower for another 90 minutes before reversing, and the stop on the RSI based entry would have been hit. The second was April 14th. A MACD crossover fired while price was trading above all 3 EMAs. Textbook bullish confluence. But the cross happened right into a resistance cluster that TrendSpider had already flagged days earlier. Traditional tools didn't show that context. The breakout failed. The third was April 21st. RSI was neutral, MACD was trending bullish, and the 50 EMA had just provided support. 3 green signals. Price ran for about 45 minutes and then reversed hard on a news headline. Nothing in the traditional setup would have warned you. Now let's look at what the AI toolkit was doing on the same chart during the same month. LuxAlgo's signals and overlays generated 18 signals over the 30 days, fewer than the traditional setup. This is actually the first thing I noticed. The AI toolkit generated fewer signals, not because it's less sensitive, but because it requires structural confirmation before it fires. If the market structure isn't clear, it doesn't force a signal. That restraint matters more than people realize. Of those 18 signals, 14 were clean, meaning LuxAlgo and TrendSpider agreed on direction. Of the 14 clean signals, 9 hit their 2.1 target, 5 hit stop loss. That's a 64% win rate on clean setups, with a net result of approximately positive 5.8% over the month. using the same 1% risk per trade assumption. Same chart, same month. Traditional setup, positive 2%. AI toolkit, positive 5.8%. That's nearly a 3x difference in outcome, not because the AI tools are magic, but because of two specific advantages I kept seeing repeat themselves. Advantage 1, the AI toolkit filters false signals. Let me go back to April 7th, the one where RSI flashed oversold and got chopped out. What was LuxAlgo doing on that same candle? LuxAlgo's price action concepts overlay had identified a bearish fair value gap directly above the current price, an unfilled imbalance from 2 sessions earlier. That zone was acting as overhead resistance. When RSI screamed oversold, LuxAlgo showed that the structural context didn't support a long. It didn't fire a buy signal. It stayed flat. The traditional setup got burned. The AI setup stayed out. That's not a coincidence. It happened on 7 of the 13 partial signals the traditional setup generated. In most of those cases, LuxAlgo's structural analysis showed a conflicting reason, a fair value gap, an order block, a change of character in the opposing direction that the traditional indicators were completely blind to. Advantage 2, the AI toolkit adapts to regime changes faster. Traditional indicators are calculated on fixed look-back periods. RSI uses the last 14 candles. MACD uses a fixed exponential average. They don't know that market conditions changed. They don't recalibrate when volatility spikes. They just report the math. LuxAlgo's algorithm adjusts for volatility dynamically. In the high volatility sessions of early April, when tariff headlines were moving markets 1% in 30 minutes, the traditional indicators were firing signals based on calculations that didn't account for the expanded range. LuxAlgo's signals compressed during those sessions. Fewer fires, tighter criteria. The system recognized it was in a different environment. TrendSpider adds another layer here. Its automated trend line detection recalculates in real time. Every session, TrendSpider is redrawing the structural levels based on the most recent price action. There's no static line drawn 3 weeks ago that you forgot to update. The analysis is always current. TrendSpider runs at a subscription price that varies by plan. Check the current pricing at the link in the description as they run periodic offers. For what you get, automated chart analysis across thousands of symbols, pattern recognition, and the cleanest trendline detection I've used. The value for an active trader is clear. I use it as my structural context layer, and it has replaced probably 2 hours of manual chart prep per week. LuxAlgo is $27.99 to $32.99 per month and runs inside TradingView. Both links are in the description. One thing I want to address, how to test this without real money. If you want to run this comparison yourself, and I think you should, the cleanest way to do it is paper trading. Webull has a built-in paper trading mode that mirrors the live market in real time. You can set up a paper account, run LuxAlgo signals or TrendSpider setups, and track your results for 30 days before you commit real capital. That's how I validated the approach before scaling my position sizing. Webull link is also in the description. Paper trading costs nothing. There's no reason not to run the experiment yourself. So, let me give you the honest verdict, including who should use which setup. Traditional indicators, RSI, MACD, moving averages, are not obsolete. For someone who is brand new to trading and learning how to read a chart for the first time, they are still the right starting point. They are transparent. You can see exactly why they're giving you a reading. They teach you about momentum, trend direction, and support and resistance in a way that builds foundational understanding. You cannot skip that step. But here's the ceiling of the traditional toolkit. It requires you to be the decision engine. You take the raw data and you make the call. That introduces human error emotional interpretation, and the kind of second guessing that produces inconsistent results. In the April 2026 market, with all the volatility and noise we had, inconsistency cost you. AI indicators, LuxAlgo and TrendSpider specifically, are better for traders who already have that foundational understanding and want to systematize the analysis. They are not a substitute for knowing what a fair value gap is or understanding why market structure matters. But for traders who know those concepts, having an AI layer that identifies them automatically and surfaces them clearly is a genuine edge. The gap I found, 54% win rate versus 64% win rate, positive 2% versus positive 5.8% over the same month, was consistent enough that I'd call it structural, not lucky. The AI toolkit's advantage came from two specific improvements: filtering false signals with structural context and adapting faster to regime changes. Both of those are problems that traditional indicators can't solve because of how they're designed. My actual recommendation after 30 days of running this, if you're just starting out, spend 4 weeks learning to read RSI, MXD, and EMAs on paper, understand the logic, then add LuxAlgo on top. Don't replace the foundation, build on it. If you're already trading with traditional indicators and you've hit a plateau, the signal quality gap I showed you in this video is real. LuxAlgo and TrendSpider together cost under $60 per month. If they improve your win rate by even 5 percentage points and reduce your false signal exposure, they pay for themselves in a single good trade. Links for everything are in the description. LuxAlgo, TrendSpider, Webull paper trading, check them before you sign up directly. I've got the best available offers linked for Black Bear Finance viewers. And one more thing, if you thought this test was interesting, wait until you see what happens when I run AI indicators against each other. Next video, LuxAlgo versus TrendSpider. Same chart, head to head, which one actually called more correct signals. That one's coming this week. Subscribe and hit the notification bell so you're there when it drops.